What's up guys, Raymond here with another financial statement analysis video. In this video we're going to be analyzing a stock called Symrise, and this is episode 13 in our German material stock analysis videos. We're almost at the end. We have, I believe, three or four more videos left. If you're new to my financial statement analysis videos, what we do is we analyze the top three financial statements relevant to a company, those being the income statement, the balance sheet, and the cash flow statement. We also look at the key factors of each statement and thus come up with a conclusion and an overall idea of the financial strength of a company, as well as determining whether or not the company has a strong future. So without further ado, let's start with the key ratios. The market cap, which is the overall price of the company, is 15.58 billion euros. The revenue, which is the overall sales for the last financial period, was 3.83 billion euros. These are really strong figures, by the way. The dividend yield, which is the amount of cash that the company will be has paid out, was 0.92%. The PE ratio, which is the price divided by the earnings per share, was 40.59, which is actually pretty high. It's about 4 times what I would say is a good PE ratio. The earnings per share, which is the amount of profit that the company made per share, which is 2.75 compared to 113 euros. So that is a pretty small amount of earnings to have made for such a large company. The beta, which is the overall risk level, was 0.49, which is 50%, just under 50%, 49% of the market average. So this company is in terms of market fluctuations, the stock is pretty stable. Let's get into the income statement. So as you can see by the charts, the company has had a smooth growth of revenue, which is the light purple figure, over the past 3 financial years, and also has a smooth increase in earnings. So a smooth earnings growth over the past 3 financial years, as well as a smooth revenue growth over the past 3 financial years. It also does have a pretty decent level of profit compared to revenue. It looks about 10%, maybe a bit less, but that's a good minimum for a company to have, especially considering the size of the company. Let's get into the balance sheet. The balance sheet depicts the liabilities, or what the company owes to its creditors, compared to what the company owns. So the assets will be the light purple figure, and the liabilities will be the dark purple figure. So the assets, a good debt to asset ratio would be around 50%. And it looks like this company has around 60%, maybe 65% debt to asset ratio in the 2020 year, and about 60% or 65% in the 2019 financial year. But in the 2021 financial year, it managed to do pretty good and increase its assets, but also managed to decrease its liabilities proportionately. So it managed to get to about 50% level of debt to asset ratio, which is pretty good. Let's look at the cash flow statement, which shows how the company manages its inflow of cash, as well as how it manages liabilities. I'm going to get into more detail on this one. So the net income is the starting line, so that shows the overall profit of the company in the last financial year. 2021 it made 385 million euros, 2019 it made 297 million euros, and 2020 made 419 million euros. So overall it's made a good earnings growth over the past 3 financial years. It's gained in earnings consistently over the past 3 financial years. The first part of the cash flow statement would be cash flow from operating activities, which was 516 million euros. Cash from financing activities, the second part, which is almost always a negative figure, was negative 713 million euros. Let's just check how it spent that cash. So it spent 174 million euros of capital expenditures, so expanding its capital. So that's probably why we saw an increase in its assets, the light purple figure in the balance sheet. And other investing cash flow items was 539 million euros. So cash flow from financing activities, which is the last part, was negative 992 million euros. And that went to 131 million euros paid in cash as dividends to shareholders, and 80 million euros was gained in liabilities by adding some debt to the company's books. Foreign exchange effects, the company gained 18.31 million euros, which is good. And overall, the net change in cash was negative 271 million euros. So overall, that's not very good as point of attraction for potential shareholders. But it's not necessarily bad because there are good points. Because the reason behind the negative net change in cash was due to things like the company paying out dividends to shareholders, which is a good thing for potential shareholders. So there are good parts and bad parts. But without further ado, I'm going to close this video. Thank you guys for watching. I will see you in the next one.